Ken, really quickly, just in terms, because you mentioned I suppose the risk to automotive demand, particularly EV, if we see so many kind of significant downturn in terms of the macro outlook. But would that impact LG Energy Solutions all that much and a lot of these battery makers? Because I would imagine that even still, the production that they actually have online right now isn't sufficient necessarily to meet all of the demand.
Yeah, I mean, the thing is, LG Energy Solution in particularly, they are relatively more focused on the European market as of today, and their growth outlook essentially comes from the US market. So company looks well positioned to benefit from this Inflation Reduction Act in the future. But in the near term, when you look at the global EV sales by different country, China accounts for nearly 60% of global volume last year. And we look at some of the tailwinds that supported the growth in Chinese market is now gradually turning into more headwind, given government is now cutting the consumer subsidy. And given China's dominance in global EV sales volume as of today, the slowdown of the Chinese EV sales volume means essentially slowdown of the global EV sales volume as well. So given the near-term pressure on China's EV sales growth volume and also potential recession fear for European market, obviously the stocks in the entire value chain will be also negatively impacted by the potential recession fear. But again, compared to Chinese battery maker, I think Korean and Japanese maker is relatively well positioned given their large reliance on non-Chinese market, which showed relatively better growth coming from the low base last year.
I understand that all these battery companies are betting on proliferation of EVs, and that seems to be really the trend that a lot of people are betting on at this point. But looking at all these capacity ramp up, especially in North America and so on, with that kind of concentration in one region too, I wonder if there is any discussion about the long-term risks going forward for companies like this, such as battery recycling technology. Any line on that?
I mean, battery recycling, becomes like a no-brainer going forward, given the structural tight, supply demand for critical minerals. We are relatively more constructive to the critical, a green metal price outlook heading into 2030. We see continuously this, incremental supply growth, continuously lagging demand growth going forward. That's why we see structurally a tighter, supply demand for critical mineral market going forward. That is obviously bode well this structural growth opportunity in recycling battery, the market as well. So, but the market is not really fully ready, given a relatively small volume of the retired battery as of now. But given the development in technology and the commoditization and standardization of form factor and their chemistry, we see obviously the exponential growth opportunity from this 2027, when the first generation of EVs will be eventually retired and ready for scrap or the reuse from this first generation of EV sales in the past decade.